Hello again. Time now for this week's Portfolio Check, where we get expert advice to help you build your investment portfolio. Well, markets globally are facing uncertain times, and inflation is rearing its ugly head. In this challenging period, some investors are shying away from investments, but some analysts say it's still crucial to be planning for your financial future. Let's find out more. And our guest tonight is Yash Mishra, Head of Private Client Services at IPAC Financial Planning. Yash, thank you so much for your time. Now, we've got some pretty trying times now in the market. We have inflation, slowing economies, even volatile stock markets. How should investors manage their portfolio right now?
It is very important for investors to actually maintain a long-term perspective right now, and diversification is more crucial than any times before. That means that they must have a mix of asset classes in their portfolios, like equities, listed properties, bonds, and cash. It is important for investors to realize that right now there are buying opportunities out there.
Well, if there are buying opportunities out there, then how often should they be, say, positioning their portfolio or do a financial review?
Great question, Melvin, because we do try and tell our clients that they should not look at their portfolios too often, weekly or monthly, because that is a surefire recipe for stress. What we try and do with our clients is have a very detailed annual review with them, but having said that, if there are significant changes within their own circumstances, we do review interim reviews of their portfolios.
Well, I want to ask you about this thing that's pretty hot in the market now. That's inflation-linked products. They've come into the spotlight recently because they say that you could perhaps beat inflation with those products. Do they really work?
Yeah, I mean, the one such product is actually the inflation-linked bonds. And very simply put, how they work is this way. The coupon rate is linked to an underlying inflation-linked index, and usually it's the consumer price index, which is a good indication, and your capital is protected.
Well, what are some of the issues that investors should be aware of when they are investing in these inflation-linked funds then?
A couple of things that investors should look out for, and one of them is they should realize that this protection against inflation comes at a price, and that means that yields are pretty low in these portfolios. The last time I checked, there would be around 1 to 2%. And the second thing they should be aware of is that they should understand the underlying investment peg, because inflation peg, because for them it should be relevant.
And if investors were to ask you, say, how do you position or allocate your funds to such a portfolio then?
Typically, a growth portfolio would have about 15% allocation to bonds, global bonds. And having said that, within an asset class itself of bonds, you should have diversification. So not all of it should be in inflation-linked bonds.
Okay, Yash, it's good to talk to you. Thank you so much indeed for your time today. Yash Mishra from IPAC Financial Planning.